TradeTheMBI.com. This is John. This report is for the 28th, so just shy of the 29th. Well, this is what weakness begins to look like. So we started with the fade, just a little bit of the magenta, and as I was pointing out, move back below 33 would certainly generate more weakness within it. Short started to activate on our DOC here by the cyan taking over green, so we formed a spider, as I call it, and we've been in a slow motion slowdown here of short-term buyers, and uh, now having reset below the orange from a positive standpoint, meaning a turnaround there, along with a turnaround of green, would give you your next leg up. And it's interesting to say that while we're in a clear sell signal, but it's worth pointing out because it's something that you'd want to watch for, simply because move above that 38%, I think would definitely hit the 50 and plus if it is able to do that. Not showing that at this particular stage, given that that's a complete turnaround, but pivot back up and it's ready to go, and that would be consecutively higher pivots for the magenta. So it's within the realm of possibility. Where it gets a little bit tougher is when you see the shakeout, because usually when you move to positive, a return back to negative usually has a little bit more significance to it. So definitely worth keeping an eye out as we start to move lower for any of those turn signals. Because as I pointed out, this was going to be that volatility, and some people I had read they were, oh, volatility is going to ease, things are going to get softer. It's like, no, they're not. They're not. In fact, the more uncertainties exist because a lot of what is being attempted from the Fed and others worldwide in this coordinated effort hasn't been done before, and it's more likely than not going to cause chaos and disruption rather than the relief that they think they're getting. The NQ has been interesting because it had already been in that sell signal from when the magenta pivoted below, white took above, and actually recovered quite a bit the other day, and now coming back towards some of those lower points. So again, dip buyers continue to be sucking up, preparing for early part of next month and the end of the lockup period, that kind of situation. The euro, from its tear, dipping back below parity. The ECB raising rates so dramatically, 3/4 of a point, still so far behind where the U.S. is. Um, it's not much of a benefit. It doesn't change any other underlying. And this is the interesting thing: you get these headlines. They, the broader situation has not changed. I mean, when you're looking at, mortgage rates and that in the 7% range and stuff, uh, it's going to have a significant impact in slowing things. And the question is, how deep will that slowing be? You hear one positive thing, and there's a big reaction to say that the Fed's going to change and turn everything around. Not necessarily, because remarkably, the economy's held up fairly decent. So if it's mild and not dramatic, there'd be no reason for the Fed to do anything. They're willing to accept a certain degree of softness. They've already expected it, and given the way they calculate the numbers these days, they wouldn't know unemployment jumped for many moons, simply because of the massaging effect to it all. So it's relative. Gold, not able to really capture anything because, again, that really tends more towards a deflationary cycle than anything, particularly if all the good things that have been bought at higher prices. Now they're going to end up having to go on sale potentially because you've got a consumer that's getting tapped out on the lower end. I'm not saying that for the mid range because middle and upper, they still had quite a bit of reserves left over. And I mean, barring any major uh, market collapse, I think a lot of that liquidity still exists for them. From an oil, though, 88 is still going to continue to drain, suck, and cause extended price increases in various locations. You've seen this major rally back up to 97, and that does put us right in that range where I was looking at that at least dip to the 93 and then pivot from there, and that's kind of exactly where it did that. And I think it needs to settle somewhere in that 97, 98 range would be fine. That would at least be more consistent and give time for the market to absorb this dramatic change, and particularly when it comes to corporate financing, things like that. It's going to be really interesting as they go forward. We continue to see lackluster results from tech in some of these areas, so it's going to have its impact. Bitcoin still doing fine over the 20. Um, you know, it's held that bottom at 17 quite beautifully. This is bear signal though. You got the pivot magenta lower with weight MBI, and that suggests a move back down to the 0%. So we will keep an eye on that one as well. 50K from the other day had been continuing in that sell signal, and none of that's changed. I mean, you can see it's just been a continuous dream of red. And what I think has been exciting is these ranges intraday have been good. Uh, Everything's pretty clean for the most part. I think that what we're seeing though is when we get some of these extreme oversold situations, like DOC red like this, way down here, when it was that minus 26 range. When you see those ranges, we always know that you're going to get a pop. Now the question is, what does that pop do? Well, in an intraday situation, that kind of pop forced not a little short cover, merely brought us back up to 38.60. But again, I had that 38.23 as a marker that still needed to be returned to. There it is. And as we continued on, I just think that it got harder. It's just going to be a harder case for bulls because you've got to find new buyers. You don't have the same liquidity you had before when no matter what was sold, there was always buy the dip, buy the dip, buy the dip. And now that's become a little bit more challenging. And I think some people have gotten a little more jaded on it. Obviously, there's still going to be rips within this broader downside uh, move, but it's kind of normal. The difficulty is their sustainability, and like we're seeing this one, this clearly this move from a daily standpoint should have popped to the 50% mark. That it didn't. Yeah, that's doesn't bode well. That said, there's been a lot of intervention, so it's like one of those where you can't hold on to this rigid case of it's all going to hell in a handbasket because um, the Fed can pop in at any time and say, we're going to support this. And they've been doing it a lot indirectly, and it certainly has its impact because prices, uniformly will be bought up, and you just have to be prepared to make those adjustments. As you can see, intraday, we started uh, post market fairly decent, pulled back into a lot of it, just a couple of positive extremes were right in this mid range, just above where the 37.84 was before. So that's the long and the short of it. Is particular right now. It looks like we're just about to get into a nice little buy phase at this particular moment. Long way to the open though. As always, though, continue to look for me on the Skype chat. I'll be sending out indicators for November because it's going to be that time just after the beginning of the week, and I want to be ready for that one. October's been exciting, but I think November could really be an interesting one. Now, there's a lot of potential, and a lot of people think that a bull run, leading to the holidays, is kind of a traditional thing. Juxtapose that with the actual economy, and we could see some interesting fireworks. As always, though, trade well. We'll talk again later.